the benefit for a home buyer purchasing a fixer-upper is you're buying the house at a discount, typically because the seller knows it needs X, Y, and Z updated, and then you're able to customize it to the way that you would like, right? And now you have a house that you purchased at a discount, a property that you fixed up to be the way you want it to be, right? And then now you've created extra equity than just what your down payment was.
Hello, this is Lydia Gray from the Lydia Amputees Foundation. We call them the Missing Piece. We, Advisor Mortgage Group. On my right here, I have Jane McClutchy. I'm doing fine. Patrick Shaw. Jane is a loan officer, if that's what you call it. Yes. And Patrick is the mortgage advisor and renovation sales manager for, I will use the acronym AMG. That's the Advisor Mortgage Group. That's their acronym. Patrick has worked, he has 28 years of experience in this field. And let me introduce our topic for today. We're talking about renovation mortgage, and Patrick and Jane are the experts for renovation mortgage. As Patrick has 28 years in this field, and he has worked for this company, Advisor Mortgage, for more than 10 years. He's worked for this company, and he has worked for the American Bank of New York and the Bank of America as well. In total, has 28 years of experience. I'm repeating this to tell you, my audience, that the people that I'm talking to, they are not just here because they are new to the field. They are seasoned employees. They have experience in what we're going to talk about today, as well as Jane. Jane has been in this business for 10 years, 10 or more years, and she is diligently working hard. I met Jane 2 years ago where she introduced this mortgage experience to me. We talked, but today we are here to talk to our audience. And the Missing Piece audience is not just for amputee or disabled individuals. It's for everyone to have an experience in the Missing Piece. That's why we're here. You may think that why is Lydia talking about renovation mortgage in the Missing Piece when it's supposed to be about amputation and disability? Well, I will tell you this. I have come across a lot of amputees, a lot of people with disability who are asking me for help in renovating their homes. They want ramps, they want their kitchen modified, their bathroom modified, their front door modified, and their bedroom modified. And it is so much that people are asking for that now I want to bring this knowledge to them so that they will have it firsthand. They will have a place to reach out to, which is Advisor Mortgage Group. To talk about what their needs are and how they can find ways to rebuild their home to suit their needs. Yesterday, I was at Prosthetic Innovation, and I spoke to my prosthesis, my player. I said today I am going to do a podcast on the Missing Piece and renovation mortgage. And he said to me, this is a very good experience because there are people who I meet. He deals with amputees day in and day out because that's his business. And a lot of them are asking about how could they modify their homes to suit their disability needs. But this information is not given to them because they don't know where to go. They will always send them back to their banks and other places, and to no avail. There is nothing in return for them. But today I am bringing you those two experts here who are going to talk about the Missing Piece. Do you want to introduce yourself and talk about what kind of work you do?
Sure. What do you do?
Okay, so I'm Jane McClutchy. I'm a loan officer with Advisors Mortgage Group. I've been just celebrated my 11th year with the company. Advisors Mortgage Group has been in business for 25 years. It started out as a very small one-person company, and it has grown into a nationwide company. I believe we serve 30 states. And renovation loans are just one of the many products that we offer. And I have done many of them. They serve people that are looking for a home, of an affordable home. We can take homes that are not inhabitable and turn them into fully functional homes with renovation loans. And I see a tremendous synergy between your foundation and renovation loans, because everyone who's experiencing some sort of disability or amputation needs to have the home customized to their needs. And I see a perfect synergy between our company and your foundation.
Thank you so much. And Patrick, do you want to chime in?
Sure. My name's Patrick Sharpe. I am here at Advisors Mortgage for going on 8 years. My background is in the mortgage industry, and basically my whole career has been involved in renovation lending. Throughout my career, we've worked at Bank of New York, Bank of America, and we've developed a process where we support our loan officers like Jane and the rest of the loan officers throughout the country, kind of crossing the T's and dotting the I's on a renovation mortgage, because there's a couple extra steps that are involved with the renovation mortgage that make it a little bit different than your traditional financing. We'll get into that in a little bit, but basically you're able to include any types of renovations that a property may need to make it habitable, suitable for the individual in any case. So, we have done loans where the property is completely burned out, and we are leveraging the future condition of the property. And then we've had houses that are completely fine, that someone just wants to make it special for themselves, or redo a kitchen, or put on a little addition to add an extra bedroom, or make the kitchen bigger. So it's really any possibility you can think of where you need to borrow renovation monies at the same time as your purchase. You can do that with a renovation mortgage. And you could even do it on a home that you already own. So it allows you to leverage the future value or the future condition of the property. And that's where our department comes in as support, where we're side by side working with our loan officers, keeping their clients aware of how the program and the process works. And then usually we're also with the clients after the loan closes as we start dispersing money to them to do the renovation. So we'll be with you throughout the whole process, making sure that have all your questions and put together a nice, efficient process for you.
Thank you so much, Patrick. Let me ask some questions about renovation mortgage loans that people may want to hear.
Sure.
How does the loan amounts get set up?
Yeah. So typically, right, there's going to be two types of loans. One is going to be a purchase where you're buying a property. You might find a house that is on a certain street or block. You love it. You want to live there, but it just doesn't have what you need. So the way a renovation mortgage works, it is a regular mortgage like you're used to. It's one, typically 30-year fixed rate mortgage. So you're going to have one loan, one closing, one payment. But what makes a renovation mortgage different is how we get to our loan amount. So typically you would have your sales price, you come in with the down payment, and the difference is your mortgage, right? That's how a traditional mortgage would work. With a renovation mortgage, it's the calculation of adding your sales price to what's known as a renovation escrow account, which includes a few different things. We add those together. That becomes your total costs. And then your down payment is based off of that total. The difference is then your one mortgage that you're getting. So inside that mortgage, you're not only borrowing the money to purchase the property, but include all the renovations into it. So we have programs that are offered through FHA, through conventional products like through Fannie Mae or Freddie Mac. We have a VA product for our veterans out there, and happy Veterans Day today. And thank you for everything that you've done for us and for our country. So, it's a great product for veterans because, it allows them to do anything that they would like to the property. So maybe it's changing out floors or something like cosmetic updates, expanding doorways, there's ramps that are needed, any type of improvement that the property may need that is going to benefit the individual and how they want to use the property is something that you can absolutely finance into a renovation mortgage. So we have the VA product. Other products that we have USDA loan. So we encompass all of those programs, and to make it simple for clients is we've just branded our department as Fix It Mortgage, where you can buy it, fix it, love it. Right? Make it your own. So it's the full umbrella of all the renovation products that are out there. And we even have for current homeowners who say, I don't have enough equity in my house, but I know my house needs to have, an updated kitchen or things like that. We even have home equity line of credit products that can lend on the future value of the property, right? So We just want you to know that there are resources out there. Lydia and your organization, it's wonderful, does amazing things. And then getting together these pieces to help, just bridge the gap, answer any questions is what we're here for. And we're happy to, collaborate with you.
That's wonderful to know that because a lot of people be so afraid of saying, I don't have enough equity in my home.
Yeah.
How can I renovate something? Because a lot of people buy their homes and it's sort of like it's habitable, but it's also could be a fixer up or while they're in there, they're fixing it
Yeah.
little by little, but they don't do it because they don't have the money
Yeah.
to do it up. And again, people don't want to put the extra expenses on them. But at the same time, Advisor Mortgage is able to help in that sense where they could use that money
Absolutely.
as their discretion rather than,
Yeah.
put themselves in a lot of debt that they cannot afford.
Right. What we found throughout the years that we've done this is the benefit for a home buyer purchasing a fixer-upper is you're buying the house at a discount, typically because the seller knows it needs X, Y, and Z updated, and then you're able to customize it to the way that you would like, right? And now you have a house that you purchased at a discount, a property that you fixed up to be the way you want it to be, right? And then now you've created extra equity than just what your down payment was. So you get the best benefit of having instant equity, basically, of whatever value was created from fixing it up, but also the discount that you got because of the discounted purchase price. So the difference in equity between a regular purchase and purchasing a renovation mortgage, our buyers are usually ending up with an extra 5-10% equity right out of the gate as soon as the renovations were done. When you add all of that, yes, it's a little extra work, right? You got to work with a contractor. You might be doing a renovation project together, but I encourage you to just start talking to a contractor, get out there, get an understanding of how it's going to work. And the more that you talk, the more that you understand it, the easier it's going to seem.
That's wonderful. Okay, let me ask another question.
Sure.
How does a borrower find a contractor? You already said something about this.
Yeah.
And what are the requirements of the contractor?
So a contractor, what's typically going to be required on all the programs that we would offer is that a borrower does choose a contractor prior to closing, right? We need to make sure that they're engaged with a contractor. And what our requirements are is that they're licensed appropriately, the jurisdiction that they're in, whether it's state, county, whatever the local rules would be. Typically it's carrying a state license, and that they carry the proper insurance. Typically liability. If they have a crew of people working with them, they have workers' compensation insurance, and we're just validating that information on behalf of the client. So we're technically not approving or denying contractors. We ask them to fill out a profile report. It's kind of like a resume. They state their experience, some past clients, maybe where they do banking, some suppliers that they work with, subcontractors, and then the validation of that is through that profile report. So that's typically what is required. They end up signing a contract with the borrower, with the homeowner, for the amount of work that they're intending on doing. So it's very clear. We also speak to those contractors, right? So they have an understanding of how the renovation mortgage is going to work, how the money then gets dispersed to them after closing. So we just make sure that everyone's, squared away, has a good understanding. And, what contractor's not going to like knowing that literally the money's sitting in the bank waiting to be dispersed. We're not waiting for the next paycheck or Uncle so-and-so to lend me the money so I can write the check and get it complete. We already know what the repairs are going to be. We close and then all the money is sitting in an escrow account. And then we disperse it as the work is getting completed. So that's called the draw process. And that's what we do after closing. So we give startup money to the contractor, can be in the form of a material draw. So without any work being done, the borrower and the contractor get their permits issued. And then we can release a portion of the materials to them to help start the project and get things going. And then from there, they complete work. And when they're ready to receive money, we get the work inspected, make sure the borrower is happy, the work that has been done is in a workmanlike manner, and then we release the monies to the borrower and to the contractor, and that's known as a draw. And they just could keep doing draws until your full project is complete.
That's wonderful. Goodness.
Yeah.
So who is the money written to the contractor or to the borrower?
So typically we would write it to the contractor. That's usually in a check form as an extra maybe safety net if the borrower wanted to. You see what money is being dispersed, but when the check actually gets written, we can't even write it in a dual party check. right? So we would overnight it to the borrower. It's written to the borrower and the contractor. The borrower then sees the check, endorses it, and gives it to the contractor for them to deposit.
Okay.
So to save a step, we could even just write it right to the contractor, though.
Oh,
So
o-
some clients prefer that.
okay, that's wonderful. When does the work get done?
Yeah, so we close and we want to make sure the borrower and contractor are ready to get started on their planned renovation. So the first step is to get the permits issued, right? So that's now you become the homeowner and you can go down to the town and get the permits issued in your name or the contractor's name. And then that's when the work would start. Again, you get that material draw if they would need it. And then as work is getting completed, we would have the work inspected, to show that, the client was satisfied and then approve that money to be released from the escrow account. So when we close, it's a very defined repair plan. It's not just a $30,000 number, it's $30,000, but then here are the categories it's coming from. There's plumbing, there's electrical, there's sheetrock, there's siding, roofing, windows, whatever, 35 different categories. And in each of those categories, we're going to break it down into labor and material. So every dollar of the 30,000 that's being borrowed in that example for renovations, it's clear where it's coming from. So there's no disagreement, no, differentiation of where the money was supposed to be. It says, no, we had this amount of money for this line item. After closing, can things change? Right? Any project is going to have changes in it. So absolutely, once the loan is closed, if we decided that, maybe the plan called for the renovation of a half bath, and then during your renovation, you decided, you know what, we don't really need to update that half bath. It's still staying there. The house still has a half bath. And now you wanted to take that money and put it towards maybe upgrading the countertop or putting in recessed lighting in the kitchen that you didn't have on the original plan. You can make modifications post-closing. All right. So we would want to review that with you prior to making any changes, but it is possible. So I just don't want anyone to think it's, we're set in stone. There is flexibility, a fluidness to how the renovations can work post-closing. So the work gets done after they close, after they own the home, and it gives, just good opportunity to put everything into one long-term financing, because there is really not a cheaper option if you're planning on doing renovations. To put it into long-term fixed rate financing, it just takes that little extra work to find out the work that you want to do, the cost of it, and then we'll put it together into the mortgage for you.
Wow.
Mm-hmm.
This is so interesting because a few weeks ago, amputee reached out to me. And this amputee I've known since I started my foundation 5 years ago. And she lives in a reasonable size small house in Cadillac, New Jersey. And she has stairs going up and she has a few stairs going down to the front of her house and stairs going from the back stair. And she has a tiny bathroom that is not accommodating to her. The kitchen, everything within the house needs some kind of upgrade. And again, this is somebody that their house needed like a lot of work done just because of to accommodate her alone. She told me that she has not taken a full shower. You know why? Because she does not have a rolling shower. She does not. So she needs a lot of help within her house and the stairs alone to go up and down the stairs just to give her, even though the house it's comfortable for her, but you may say it's small, but I know renovation loans would help her. But at the same time, I don't know what her fear is, but her fear is maybe it's going to be an added responsibility to my household income that may not fit me. And again, that's somebody that you guys could always reach out to and talk to as well. And I will also introduce more people that need help. Because when I post this video, I'm not posting it to satisfy Advisor Mortgage. I'm also posting it for everybody to see it. All my audience out there to see it. Because we may not know who our audience are sometimes.
Right.
But they're out there. Yesterday, a lady called me from New Zealand. I know that's out of your rim.
No, another branch there yet.
But again, calling me from New Zealand or texting me from New Zealand, is showing that the video is going
Wow.
far and wide.
Yeah.
They may not click like, they may not click saying, this is nice, but they are listening to. They're seeing it. I have watched a lot of video on social media that I have not put my impression on. So that's why social media changed the algorithm saying that once the video is open, they count it as
Gotcha. Yeah.
yes. Let's
Yeah.
what are some of the programs and the differences?
Well, so traditionally, when a client is looking for a mortgage, there's a full, range of programs that we have. So typically, what we mostly offer would be in the conforming space, we'll call it. So that's, regular traditional mortgages. So the types of programs that we have, could be for clients that are in need of FHA underwriting, which would lean more towards on the side of, there's not a lot of, pricing hits for if the credit score was at a certain level. You can still end up looking to achieve financing, or if your down payment was a little bit less, you can look at FHA as an option. Jane would offer regular traditional FHA financing. And then if the property you're looking at needs renovations, we have a renovation counterpart to an FHA loan. And the program's literally called FHA 203K. Same thing with a conventional borrower. That's maybe someone who has a little bit more of a down payment, a higher credit score. They can look at those options. And then, from there, we have the renovation counterparts. One is called Fannie Mae Homestyle, the other is Freddie Mac Choice Renovation. And then for a veteran, we have VA Renovation. So all of them have the same underwriting as your traditional FHA or conventional or VA programs. That would be regular traditional mortgages that most Americans use. And then just knowing you can add renovations on top of those is what we just fall under our umbrella of Fix It Mortgage. Right? So we're not selling one specific product, because Jane will make the introduction with the client. And then through the regular conversation, there will be an understanding of which is going to be the best, most efficient product for the client. And that's for a variety of reasons. Maybe it's credit, maybe it's income, maybe it's the type of situation that the house is in. That it has to go into a certain program because of the home's condition. So there's a wide variety, and then we also have other programs if you want.
Well, we also, there's two categories. One is where you do a purchase renovation loan, where you're actually purchasing the home and renovating it, or just a renovation loan where you already own the home and you're making the renovations on the home that you already own. Additionally, there are different levels of renovation. So if we're doing something where the house has structural changes, that's one type of renovation. And then if we're just doing cosmetic changes, it's a different category.
Yeah, it's a little bit less. So if it is just, I want to take out the carpet and put hardwood floor in, there's a little bit less of a process in terms of what we need to see to validate the renovation number. So if it is going to be looking at that versus someone who's looking to put a second floor on a property, there's a lot more involved with the renovation of adding a second floor, where we bring in a third party called a construction consultant. And most clients do like to use them because what their function is to validate the repair plan. They validate the dollar amount of the bid that the borrower is getting from the contractor to ensure they're not being overcharged or undercharged for the scope of work that's in there. And they're validating that the scope of work actually includes everything it's supposed to do, right? So, we're lenders and we help people with the financing and figuring out the programs, but we don't know, the amount of square feet of soffit that you might need to do it. So maybe a homeowner might know that, maybe they don't, but a consultant can help make sure that a repair plan that's being put together validates all that information. So we do know that, hey, this is our money that we're financing for these renovations for this scope of work, and this consultant validates those things for it. I like to, everyone kind of knows what an appraiser is. An appraiser determines the value of the home. Well, this is a construction consultant kind of validates the repair plan or appraises the repair plan. He's making sure the scope has everything needed to do what the client wants to do, as well as validating that there's enough money to do the job, to make sure that we're not, the borrower is not being undercharged or overcharged.
Oh, wow. This is really more, as you're talking, I'm thinking about my own home.
So we've done loans where construction or renovation loans where it's gone on for 6 months. that the project is big enough that it's gone on for 6 months, and some finish within a month or two. It just depends on how much work is needed. But I think what our customers really appreciate the most is that there's so much guidance, that there is really the form that the contractor is filling out really kind of, it vets them and makes sure that they didn't just get into business, the renovation business or the construction business a month ago and decide to to make a bid on adding an additional floor to your house.
Yeah.
So, and we make sure that they have the insurances, that they have the licenses, and, and that they sign a contract that says what they're putting into your house, material and labor, so that we understand the value of that.
That's great. Again, what type of improvement can be done as part of the mortgage? I know Patrick and Jane, you've said it all because it's all, as you talk, sometimes we do talk and then we include more the information that people want to hear. But the question is specific so that it stays in their mind more or less than just a passing information. So what type of improvement can be done as part of the mortgage?
So it's really any type of renovation that would need to be done on a property, as long as it's tangible to the property, right? Like we're not financing furniture or anything like that, but we're financing in any renovation. So if there's any accommodation that the house may need from a disability standpoint, to make the house more accessible, absolutely all of those things, expanding doorways, ramps, lowering countertops, whatever type of renovation that the property needs are eligible improvements. It can go a step further and structural changes, adding square footage, removing walls to open up rooms, all the way down to the minor cosmetic things of just painting and new siding, new windows, new roof, whatever type of renovation that a property may need are eligible improvements or eligible repairs that can be financed into the loan. So, we want to also look at that the types of improvements that are being done, are giving some value. They're going to be increasing the home because there are newer things, right? Even though yes, the house did have a kitchen, but now it just has a newer kitchen, right? The house had the X amount of square footage and now it has the same square footage, but it just has updated bathrooms. So an appraiser is going to give some value to that. So we also just want to make sure that things that are being done are value improving, because as a part of the calculation for a renovation loan is that the eligible improvements or the improvements that a borrower wants to finance along with the sales price, right? We add the two of them together. So you're buying for 100, fixing for 100, total cost at 200. We want to make sure the after improved value is at least 200,000.
And often it is.
And often it is. Yeah.
It's accessible.
Yes.
So with the improvements in the home, does it add to the value of the home? Is that because most people will want to say, I am putting 100,000 into a home, and you don't want the home to be, the home in the neighborhood is not valued because most of the appraisals comes in based on the value of the neighbor's home to evaluate the home that you're living. So, but and again, they don't know how long they're going to stay there for. So that's why they might want to improve their home that is going to give them an exceeding value rather than, not, the house not valuing what's there, the money's worth. If I could say that.
Yeah, I like to bring it up because it is something that is, needs to be aware of, right? We can't, and what we're describing, what we're talking about is over improving, right? Or a clearer word is like being underwater. I have this mortgage now and my house is worth less than what my mortgage is. So no one wants to be in that position, but we wouldn't let you get there. We would look at saying, okay, our total costs are this, the house only appraised for X. Are there some repairs that maybe we can scale back? We'll work with you on looking at different solutions. Or maybe it's, hey, can we renegotiate the sales price to come down a little bit? So, we'll know all those things prior to closing. And yes, the appraiser is getting the information from recent sales in the neighborhood. And that's how we our appraisers appraise the home is subject to the repairs or in its after improved condition.
All right. We've answered a lot of the questions that everyone that is listening right now will want to hear. But now I'm going to go to the inspirational part of the questions, which is going to, include my mission in what I do. Have you experienced a renovation in your own life at a time when you had to rebuild from ground up?
Me personally?
Well, not personally, but it could be anything. It could be an answer that you could answer, or
Yeah.
somebody could answer.
So yes, my house, I live on the Jersey Shore, and Hurricane Sandy that destroyed my home. Right. So I had to, use renovation financing to fix it because of the home's condition. Right. A lender wouldn't be able to give me a regular mortgage. I did have insurance money, but that took some time. But I was able to use renovation financing because of the home's current condition. It was not in great shape to get a regular mortgage. But if I did X, Y, and Z to it, which was getting all the water out and all the damage out, I was able to borrow the money, to put the new kitchen cabinets in and flooring and everything and help bridge the gap until the insurance came together. So, I do have experience there in terms of using renovation financing, for myself, but I have hundreds of stories of all the clients who's helped throughout the years on all different types of renovations. And what I just always kind of go back to is that using a renovation mortgage, when you're in the need of borrowing against the future condition of the property, and that could either be just condition or the value. That, hey, if I put an extra bedroom on this property, it's going to meet all the bells and whistles that I need. It's on the street that I want to live in, that we want to have the kids in. It's got the proper room for all the things that we need to do. Then for maybe services that needed for clients with disabilities, that it has the perfect, spot for the car, the ramp that we can build to, gain access to, the floors of the property, putting elevators in, up the stairs, or, whatever types of improvements that would be needed, leveraging that future condition. Say, I can't put all this together now. I have the money for the down payment, but I don't have the money for the renovations. Well, that's where a renovation mortgage can come in and kind of help bridge that gap if you did have to purchase a new home and do some improvements to it.
Yes, that's real, because a lot of people are looking to do those kind of things in their home, because some people have their home, and even as we grow older, we have stairs in our home. What I noticed, and I spoke to someone who wanted to sell their home and go to an affordable, a senior citizen housing. Lo and behold, the senior citizen place that they want to buy is more expensive than their mortgage now. So if even they sell the home and make money out of the home, they're going to use all that money as a down payment, but still they're going to pay an up-to mortgage afterwards, because the about living places this way now are not as cheap as they used to be. So what most people are doing, because their mortgage is so low, and they will rather modify the home and stay there, even with the stairs, and to see how they will have a better living, or maybe add a bedroom downstairs in the house, in a room that they're not using. Make it so it's more accommodating to them, rather than climbing up the stairs back and forth, because we're getting older, as I said, and some people have disabled individuals in their home. They have mother, father, who are older and living themselves.
That's interesting you say that. There's builder associations that are out there on a national level. One is like National Association of the Remodelers Industry, NARI, and other organizations, and they have a certification that they give to contractors or remodelers. And it's I'll try to get the acronym correct, but it's an aging in place, a certified aging in place specialist. So a CAP, they give them a title, and they go through a course, and what they're certified in is remodeling a home for a client that is aging, wants to stay in their house, and they teach them installing, the floors to be a contrasting color from the countertop. So when you're taking a pot, there's certain things that, as you get older, you may not think of now, but it could be a safety thing later on, and making the doors wider if there's wheelchairs, accessibility that's needed, rolling in showers, a first floor living suite. So there are builders out there, remodelers that have this title, that have gone through the training and the certification to do those types of improvements and just help clients think of the things that they might not be thinking of, to stay in place. So, there's resources out there. And again, it's, attending podcasts like this and getting the information to help better your situation. So that's what we're trying to do.
That's so wonderful to hear. So you can even modify your garage, because I've seen people who modify their garage to make it more accessible.
Yeah, that's adding square footage, because you have a garage, but it's not going to have the same value as a bedroom.
Oh,
You know what I mean? So to have a bedroom, maybe you're adding a full bath in there as well. So you just added an extra full bath and a bedroom to the property, and that's going to help with the value as well.
oh my. This this is so informative. And it's not only informative for me, but it's also informative for people out there who are looking to purchase mortgages, and not regular mortgage, but renovation mortgage, to redesign their homes. And they may not have the resources, or they're afraid that they could be rejected, or there's nothing, the bank does not have enough information. But most of us go to the bank rather than come to actual source that knows what they're talking about and know what they're doing, and have more programs to help us rather than that just to start it. Do you want to say something, Jane?
Yeah, I do. I also want to point out that Advisors Mortgage Group is a mortgage bank. We do nothing but mortgages. So we have a very large portfolio of mortgages. And to speak also of your concern that people might be afraid, we are open to speaking with people and consulting with them and telling them what is possible without any obligation. And because we have so many different loans, that we're not trying to squeeze, a situation into one particular mortgage loan product. We have so many loan products that we're able to accommodate whatever the need is for the client, whether they need to use an FHA product, or they need to use a conventional product, whether they want to do a massive renovation project, or they just want to do a cosmetic thing, or maybe they just want to do the kitchens, the bathrooms, and the floors because they need to accommodate a wheelchair, or a specialized kitchen height, or something of that nature. And then the other thing, another point I just didn't want to miss, you were speaking about retirement communities. Retirement communities have something that private homes don't have. They have homeowners association. And while those cover things like, somebody's going to take care of my lawn, I don't need to go out and mow my lawn, they are an added expense. And, if someone is aging in place, that means that they can actually age in their own home and use a renovation loan to accommodate their needs as they grow older, without having to uproot themselves and go into another community. And, I just want to make sure that we address that.
Yeah, I think in any case, right, whether we're retired or we're first-time home buyers or we're trade down, you're downsizing or upsizing, it always comes down to affordability and what makes the most sense for you. And like Jane's describing, we have all the products available. We're the number one, purchase lender in New Jersey, beating all the banks. We're the number one lender for the NJ products.
Yes, that's very important.
Yeah.
So New Jersey HMFA stands for New Jersey Home Mortgage Finance, and it is a down payment assistance program. The state is promoting home ownership, and they give a very generous, interest-free, payment-free, forgivable loan of anywhere from $10,000 to $22,000 to first-time home buyers. And unfortunately, those are not, you can't do a renovation loan in conjunction with that, but it is, and we're the number one lender in New Jersey.
Wow, I'm glad you mentioned that, because in fact, this year, the Governor's Conference featured me in their ticketboard because I had last year I went to the governor's conference and I had a tape a booth where I was a vendor there. So they reached out to me this year to see if they could use me as one of the advertisers for the conference. I was not able to go to the conference this year because there was timing difference within but they still promotes Lydia Gray Foundation out there. And I have been the sounding bell to tell young people who wants to buy homes to say, don't sit down and say, I cannot do it. When the New Jersey state have this program, which the maximum is 22,000, depending on the area or the town,
Counting.
or the county.
Stop by counting. And also there is an additional $7,000 if the person that's purchasing the home is the first generation in their family. So in other words, their parents didn't own. So if their parents didn't own a home and they're purchasing a home for the first time in New Jersey, they get an additional $7,000.
Plus the 22,000 based on what's the county.
Plus the 10 or the 15. That's how you come up with the 22. I have a flyer that I can give you that has the map of New Jersey and shows which counties are 10,000 and which ones are $15,000. And then the additional $7,000 applies to either one of those, depending on whether or not the borrower is the first generation.
Oh, okay. I have a flyer, but I have not read into it to know the split in the money.
Yeah.
And how the money.
Nuances, yeah.
Because I only gathered the 22,000, the total amount, and then I ran with it to say, just
Yeah.
So now I am well informed where I could tell people that if you're first generation home buyer, you get an additional 7,000, or if you're buying a home, but your parents have already gotten a home before, we can get either 10 or 15 based on the county in New Jersey.
Yes.
And that does not apply to renovation mortgage at all. The renovation mortgage, they could come back later and say, after the government have given me this money, can I have a little bit more to improve my bathroom or my kitchen?
After 5 years, a $22,000 loan, that portion, that down payment assistance is forgiven. If the person still lives in the house, the borrower still lives in the house after 5 years, it becomes a grant. And at that point, if you want to come back and then do renovation work, we can do that. We can refinance and do renovation.
Oh, okay, so it's not done immediately because you have to wait for the 5 years.
Yes.
Yeah, the reason the grants will typically end up being like Jane said, there's no payment, but it's still a silent mortgage, basically.
It's a lien.
It's a lien on the property. So if you refinance, you'd have to pay both of those off. So kind of.
This is the state's way of encouraging home ownership because we know that home prices have, really increased dramatically. And the affordability and the fact that people are renting and the rents have also gone up. So it makes it very difficult for people to save money. And we all know, those of us that had the fortune to be able to achieve home ownership know that this is, usually the most expensive thing in our budget. And it is also the biggest wealth builder in the portfolio that we have in our lives, right? And our financial lives. So the state wants to encourage that. They want people to do that for their own good, but also for the state's good, because they're wind up having to somehow contribute to even rent eventually, because housing is not a discretionary thing. We all need housing. Yeah, so it's a very, very good program. We've done a lot of loans with those. And, that's probably second to, what I do with the renovation loans, because renovation loans are almost an instant wealth builder because you are tapping into future equity into the house. Across the board, we've experienced that we do a projected appraisal value after what we call an ARV or after renovation value,
Yep.
and it usually exceeds what we project. So that means that the homeowner now has that much
Equity.
yeah, and equity means wealth.
Oh, wow. You guys are just mesmerizing me right now with all this information that a lot of people will need. I could even take the video and show it to all my neighbors who are live and say, you need this kind of renovation loan to get your house. Because I live in a neighborhood where most of the homes there were built over 100 years ago.
Yeah.
So, there is a lot of renovation that goes on in the homes because right now you display can be fixed it and that way rather than do an aggregate renovation gets the house a little bit more
Right.
facelift or the front give it a pop-up here.
Mhm.
Yeah.
That just sitting there and not knowing that there are programs out there to help us out.
Yeah.
You were sitting on well and not even knowing it.
Yeah.
Mhm.
But most people are afraid that their homeowners. Let's talk about that. Not the homeowners insurance, the taxes in the town will go up because with big renovations like that, the contractor have to have license, and they were afraid of their homeowners, their taxes are going to
Yeah.
increase.
Yeah, and I think a client, a homeowner can prepare for that. And typically you'll see an increase in the property taxes if you're adding, square footage. If you're remodeling what's currently there, it's the same square footage. It just might have a newer countertop or newer cabinets. It can end up getting, assessed and maybe a little bit more of a value when they do a reassessment, but I would think, taxes are just going to increase that they normally would, when you're doing a remodel, versus when you're adding square footage and you're increasing, you're going from a 2-bedroom to a 4-bedroom, and then there's more bathrooms and there's, definitely going to be more assessment. So it's always good to just do some homework around that and say, if I were to do these improvements, well, I think my house will be worth or compared to the home that sold across the street because I want to make my house look exactly like that one. And then you could look at that house and see what their taxes are. And then you can have an idea. Here's where my taxes are going to go once I'm completed with my renovation. So it's good to just do that homework and be prepared for it. And those are things that we'll talk to you about, and I encourage you, like your neighbors and not, maybe thinking that they don't know of options that are available, is just a call and we'll have a conversation and say, here's what my needs are. And then we'll see what's accommodating and what is going to be the most efficient, because that's what we would do, all day long. So it really just starts with the conversation that, like Jane said, no obligation. It's just talking to you about options, let you know what things would look like if you were to do X, Y, or Z. And then, a no pressure situation to say, hey, this is, if you want to do this, here's how you can get it done. And here's, the best way and most efficient way that we think, and our recommendation and our advisement to you of how to move forward.
This is such a what more, great information. As you're talking, Patrick, I am thinking for somebody with disability, a particular ramp in their house, would that cost more in their taxes?
I don't think so. I think they would just consider that, like a step into the property, just having, a normal front walkway. I don't see how, adding ramps or anything like that, would drastically increase taxes. Maybe each town is different. But I would consider that, the same as steps going to your normal front door. It's just now you have different steps. It's just a ramp.
So it puts in, I have 5 steps and getting rid of the 5 steps and making it a ramp accessibility, or leave the 5 steps there and put a ramp accessibility on the side. You're saying the township will be sort of,
I mean, each one might be different. That might be something that they're not allowed to tax. I would definitely check with the town on that. It is coverage, right? And something like that would require a footing to be put in. You're putting a deck in. A footing is, a concrete hole that's going in the ground, filled with concrete that the support for the ramp or the deck is going to be on. And that needs to be inspected. So, there will be a permit required for that, which requires a permit to be closed out. And then the building department will then maybe notify the assessor's office that a permit was just closed out. So now it puts it into the rotation for reassessment. So I would just check with the town on how that would look and, if there would be any potential increase. But I would think it's something like that. It would be nominal, if any. Yeah.
And there again, when the customer comes to us and talks to us about what their wish list is, we are able to assess whether or not it would be worth doing a complete renovation loan, which requires refinancing the underlying current mortgage, or whether they should do a home equity line of credit, which doesn't involve touching the underlying loan. Some people who have bought their homes in, in 2020, when was COVID?
Yeah.
2020, when the interest rates were, sub 4%.
I know.
It may not be worth it to for a small project like just a rent, to refinance the whole house. It might be worth it just to do a HELOC loan where you just do the small project. But again, that's, we have so many loans that we're able to figure out, give you options and say, we don't have any interest in forcing somebody to refinance the whole house.
Oh.
They don't need to.
And that's been me. So, a question that maybe I should have asked earlier. For those who may not be familiar, what exactly is renovation loan and how does it differ from traditional mortgage or home equity loans? Because you talk about the HELOC, because HELOC and all those other ones can be tied into like the home equity line of credit.
Yeah. So, I mean, the main difference, and I think, to Jane's point, and we'll advise on what is going to end up being the best option. So, I mean, really the main difference with a renovation mortgage or a traditional mortgage like you're used to, which can include cash out if you own the property, maybe you owe $200,000 right now, the house is worth $500 today as it sits, and you just need $100,000 to do renovations. Well, Jane can help you out with a regular cash out refinance. So we'll talk through all those options. In that example, if you owed $400,000, the house is only worth $500,000, but you still need $100,000 to do renovations. The two together, the $400,000 plus the $100,000, it's too much of a loan versus the current value of the home. But say, hey, the $100,000 is going to now, I'm adding extra bedrooms and my house is going to be worth $600,000. So now we're leveraging the after improved value or the after improved condition. And when we're looking at the after improved, that's where the renovation mortgage comes in. So that's really like the main difference. And when I bring up condition, it's because maybe the property is a property that you found that is a great block, a great street, but it doesn't have heat or the septic system's destroyed. You can't use it, but you need all these renovations. So we have to lend on the future condition of the property, which also will have a better value. So I think that would be the main difference. But, I just encourage, if you are out there property searching or you have a remodel plan that you're looking to do, is just reach out. And we'll be able to, talk through what some of the best options would be for you.
That's wonderful.
Yep.
I don't know whether you guys have any questions for me, but I think I have, beat out most of the questions that people will want to hear, the knowledge that they will need to see how much they could use renovation mortgage or fix it.
Yeah.
Fix its lending. So improve their home, whether they are amputees, disabled, older individuals, younger, new homeowners. You can always reach Advisor Mortgage Group because they have the answer. They're going to help you. And just even saying, Lydia, we talked from the missing piece. You saw it from the missing piece. And that's how you get to know about the program. And together, or you reached out to me, I will always direct you to Advisor Mortgage Group to meet Jane and Patrick.
Yes.
I'm sorry.
We really appreciate you guiding us to reach out to your membership and to help other people achieve homeownership, whether they're experiencing a disability and need accommodations or whether they're just first-time home buyers or they're looking to renovate the house. We really appreciate that inviting.
Yes, Jane has been a wonderful individual. Introduced me to Patrick. We are all here and we want to help homeowners and we want to help people with disability to improve their homes and to reach the veterans who may think that there are no programs out there for them. There are a lot of programs out there for them to help them and renovate their homes or finding a place to stay. Any questions for me?
No, I just want to, like Jane said, just thank you for having us be a part of this, and we're here to help. And I think anyone out there with any questions, just reach out. We'll have a conversation, point you in the right direction, and just give you good advice.
Thank you so much, Jane. Thank you, Patrick,
Thank
for
you.
having me here today. This is a wonderful opportunity for the missing piece to broadcast, knowing that there are people out there who need help. I thank you all
Thank you.
for your time. Thanks for tuning in into The Missing Piece. Don't forget to follow, subscribe, and leave a review. Your support helps us reach more listeners and amplify more voices. Until next time, keep finding strength in your story.